When it comes to retirement accounts, there are plenty of them to choose from, but is a SEP IRA the right choice for you? Stick around to the end of the video to find out. Hello everyone, and welcome to another video produced by Financial Anatomy. I'm your host Elijah, and in this video we'll be talking about what is a SEP IRA retirement account. There are many different types of IRAs, including a traditional IRA, Roth IRA, and SEP IRA. Now, if you haven't seen my What is a Traditional IRA Retirement Account video, you want to watch that first because it contains the fundamentals of what an IRA is in general, and this video will focus specifically on what a SEP IRA has to offer to you. The word SEP stands for Simplified Employee Pension, and it's designed for self-employed individuals. So let's say if you're a plumber and you have your own business around plumbing, then you would qualify for a SEP IRA. Let's say you're a hairstylist and you do nothing but hair, then you would qualify for a SEP IRA. It's meant for those that are self-employed and have their own private practice or their own self-contained business. As I've said in my other retirement account videos, this video will always focus on what this retirement account has to offer an individual, and it doesn't take corporations into consideration at all. So to show the attributes of what a SEP IRA is, we're going to use an example and go to the Financial Anatomy chalkboard. So I'll see you over there. Before we jump into what a SEP IRA is, we have to know what an IRA is in general. So what is an IRA? IRA stands for Individual Retirement Account. In other words, it is a retirement account that you set up on your own. In it, you can hold money or investments such as stocks, bonds, mutual funds, index funds, and ETFs or exchange traded funds. An IRA can be set up in a bank or a brokerage. There are various savings and tax advantages an IRA can offer. There are different types of IRAs such as a traditional, Roth, simple, and SEP. This video will focus on the SEP IRA. SEP stands for a Simplified Employee Pension, and it is available for both self-employed people and employers to set up. To show the attributes of a SEP IRA, let's take a look at Ben, who is a video editor and works on top-line productions in TV shows and movies. He makes $150,000 a year as a freelancer and consulting in the industry. He decides that it's time to start setting up for retirement, so he opens a SEP IRA. The end of the year is here, and he decides to make a huge contribution to his SEP IRA in order to offset some of his tax responsibility for this year and put money in his retirement. He wants to contribute the maximum amount he can. So, how much should he contribute? That depends on how much money he made. The maximum amount of money that can be contributed to a SEP IRA is either 25% of the person's annual income or $57,000. The smaller of the two is what can be contributed. So what is 25% of Ben's $150,000 annual income? For Ben, it's $37,500. Since he wants to contribute the maximum amount possible that year, he will contribute the $57,000 and not the 25%. You may be wondering if Ben can withdraw from his account before retirement without any penalties. The short answer is no. If Ben ever withdraws from his IRA account before the age of 59.5, he will have to pay a 10% penalty as well as taxes on that money. Like other retirement accounts, there are special exceptions such as the medical expenses and tuition coverage that falls under the IRS's hardship distributions, and a SEP IRA can be withdrawn upon before 59.5 with no penalties. For more information on what qualifies as a hardship distribution, visit the IRS website in the description. It will also be mandatory for him to start withdrawing at the age of 70.5. So, now for the part you've all been waiting for. What are the pros? The winner by landslide when it comes to pros here is the huge contribution limit that a SEP IRA offers as opposed to other retirement accounts. The contributions that can be made here in a year is literally more than all the other retirement limits combined. Keep in mind that contributions to a SEP IRA can reduce the amount you can contribute to a Roth IRA if you have one. This big contribution limit adds in itself another pro since these contributions are tax deductible, making them a big deduction as well. On top of these, you pay taxes when you withdraw or later when you could be in a smaller tax bracket. This makes more sense for the self-employed since their income is often tied to the level of activity they are doing. In many cases, that activity decreases when one is retired by default in this situation. This means that you could be in a lower tax bracket. To top all of this off, you control what goes in. Money, stocks, bonds, ETFs, it's all up to you. Of course, it does have cons, so let's go into it. The full responsibility of selecting investments for the account falls on you. This can be seen as a con to some, and like I mentioned before, withdrawing before retirement can come with a 10% penalty. While the contributions are tax deductible, you are paying taxes later, which means inflation will be working against you. And there we have it, folks. Those are the pros and cons, as well as an overview of what is a SEP IRA. Is it a right account for you? Well, that's going to depend on if the pros outweigh the cons for you in your particular instance. I say a SEP IRA is great for those who are self-employed and they're looking to minimize taxes for this year while saving for retirement at the same time. But you want to take a look at the other retirement accounts also, because they may have something to offer you. That does it for this video. If you like it, give it a thumbs up. It's much appreciated. It helps with the YouTube algorithm, as well as subscribe if you're new. And be sure to join the Financial Anatomy newsletter where you can get my free ebook, Still My Financial Blueprint, where I share with you the blueprint I've been using for years that has helped me manage money and plan for retirement. I'll catch y'all in the next one. Don't forget to get out there and take control of your financial destiny.